Hey, good morning. This is Jerry over at Wealth Dynamics. Hope you're having a good day today. I'm just wrapping up my workout, 6:15 a.m. Did some arms today, as you can see. A little bit exhausted and sweaty, but that's okay. My arms aren't shaking, so I can do this video for you. I want to talk to you this morning about something you need to think about, a concern that I have with the 401k match. Not a lot of people know about, and it's really the main thing you need to consider before you do your 401k match, before you contribute to your 401k. All right, now think about this. You're working your job, right? You have the company 401k plan, and all of a sudden, your company decides they're just gonna give you free money. Free money. Now, when you get money, ordinarily, you have to work 40 hours a week and then they pay you. This time it's just free. Okay, you need to think about, why would my company give me free money? Okay, because your 401k match, they're telling you, hey, if you put in $1, I'll put in $1 as well, up to 3% of your salary, right? So you got to look at, all right, well, they're just giving me free money. Why is that? And if you really study behind it, a lot of people, they do the 401k. You do the 401k because you're like, man, that's 100% rate of return on my money. Even if I make nothing in the stock market, I'll still double just because I have my employer match. It would be stupid not to do it, right? Now, anytime I'm getting something for free, I know that that's not how the world works. So I'm asking, all right, what price am I really paying that I don't know about? Because the things that are free are those things that cost you the most. Okay, the things that are free are the things that cost you the most. There is always going to be some sort of commitment, gotcha, string attached when you have something being given away free by another corporate enterprise or business. Right? Even I do it. I do a free wealth creation formula. The gotcha is I'm going to be able to earn your business after I do it. Now, you know about it, so that's the difference. But with your 401k, you don't know about it. So why is your 401k match free, and what do you need to know about it before putting that money in your 401k? So number one, you're putting money in the 401k. That's going to go to Wall Street and the IRS until you're age 59 and a half. You cannot touch that money. You can't use it. If you ask your employer to cash it out early, they're probably going to tell you no. Even though the IRS says you can, your employer is probably going to tell you no, you can't. And here's what's going on. When you put money in that 401, you have your contribution and your employer will typically give you a match, right? And you guys know that I'm not a fan of the 401k. By the time you include inflation, volatility, taxes, and fees, you actually make no money. Most people don't realize that. So overall, I'm not a fan of the 401k. But you have this match thing. So why wouldn't you go get the free money? All right, so here's the deal. When your employer matches you, the reason they are matching you, there's 3 or 4 main reasons. The first one is, and you may not have known this, when your employer sponsors the 401k plan, they are considered the plan fiduciary, meaning they are financially responsible for the outcome of that plan. If you lose a bunch of money, they could be at fault, because they were the ones that selected the plan. They were the ones that told you what investments you could go with, right? So they're in responsibility of the plan, and because of that, if anything bad happens, it's kind of on them. Now, in 2008, after the market crash, there was legislation released by Congress basically stating that if your employer matches your contribution in the 401k, they cannot be held financially responsible against any losses or mishaps with the 401k plan. And the idea is they've got skin in the game too. So if they've got skin in the game too, if you lose a bunch of money, technically they lose a bunch of money also, because they've been matching and their money's in the plan, and so they cannot be held at fault. All right, so what is your employer match really? It's insurance against you. It's insurance against you. If something bad happens, they would rather pay a 3% match than have to be financially responsible for the outcome of your 401k plan. That's the first thing you need to know about the match. Now, the second thing, and this is where it's sneaky, the match isn't their money. The match is your money. When you get a 401k match, it is not the employer's money. It is called deferred compensation. It means that any money that they match you, ordinarily, if there were no 401k plan, they would have just paid to you as income. Okay, so they're gonna put your money, they're gonna tell you to put your money in the 401k plan. They're gonna match it so that they don't get in trouble using your dollars. And then they're gonna write those dollars off on their taxes, and they're gonna avoid payroll taxes. It's beautiful. Think about that. I'm going to avoid payroll taxes. I'm going to put your money into the plan, matching it with your contribution, acting like it's mine, so I can't be in trouble if something bad happens in the plan. And it's all going to work out for me, the employer. Now, the other benefit is Wall Street and the IRS, they get your money. Okay, Wall Street's going to make hundreds of thousands of dollars in fees on your account over the next 20, 30, 40 years. Wall Street is gonna just love that. The IRS is gonna make a bunch on taxes on your withdrawal because tax rates are gonna be higher and you're gonna have a bigger dollar amount. And you can't use that money until you're 60. All right, so when you think about the 401k plan, you're putting money in there to get free money. Really what you're doing is you're being used as an insurance policy against yourself so that your employer doesn't have to be responsible for anything that goes wrong in the plan. Secondarily, the money that they're using for that is your own money. They're gonna get the tax deductions, they're gonna avoid payroll taxes, and they're gonna use your funds because it's called deferred compensation. And a survey was done, guys, with employers and 401k plans, and employers admitted for every dollar they put into your 401k match, they equate a 99-cent wage reduction. Meaning for every dollar they're gonna match you, they're gonna reduce your wages by 99 cents on that dollar. That was what was surveyed by actual employers with 401k plans. Guys, they're not just giving away free money, they're working the tax code. They're looking at how do I minimize taxes, how do I minimize risk, how do we make a better position for the company, just like you should be doing for yourself. You should be running yourself like a business, but instead of chasing free money, you've got to have an awareness of what's going on with your actual finances, with your actual 401k. Not only that, guys, but you can't use that money till you turn 59 and a half. And as I said earlier, for most companies, if you tried to pull that money out early, they're not going to let you till you retire or you quit. Because their money is in there too. It's really your money, but you know, they're doing the match thing. So you need to consider this before you do the 401k plan. Most people just auto enroll because you're supposed to, and the HR department said it's a good idea, and all of your buddies in the office or around the water cooler said it was a good idea. Like, don't just listen to the crowd, guys. Your HR department, they're not financially wealthy. Your financial advisor is probably not even wealthy. Okay, your employer is wealthy. Wall Street is wealthy. Like, you need to be looking at the people that actually have the money and studying what they do. Okay, if you study the 401k plan, guys, it's only been around since 1979. Think about that. There are some of you on this live stream watching right now that have birthdays prior to 1979. You're older than the 401k plan. Meaning we haven't even seen a full generation successfully use the 401k. Yet everyone is doing it. And if you look at the stats, guys, 1 in 4 pre-retirees at age 60 are finding out they have to postpone the year they get there. Okay, 60% of all retirees age 65 and older have less than 30 grand in their 401k plan. So when we're looking at the stats that we do have, are showing that the 401k plan doesn't work. And I don't want you to be the person that finds out it doesn't work when you turn 72 and you run out of money and you've got to go work at Walmart now because there's no employment for you and because you thought you were going to be retired. Like, I don't want you to be that person. So if you're watching this right now and you are, 30, 40, 50 years old, you're working, you're putting money away for retirement, you're doing the right thing, but you're doing it with the wrong people and you're putting the money in the wrong place. So what I want to do here is, if you're watching this and your mind was blown like Chad's, I love Chad. If your mind was blown like Chad's, I want you to click on the link I just posted in the comments. It's called sacredaccount.com. Okay, sacredaccount.com. All right, and what you're going to see there is there's some information about an account that I use as an alternative to the 401k plan. It's where I put my money. I use it for accumulation of my saved income for the sole purpose of investing for cash flow. Okay, it does not go to the stock market. It does not go to the 401k plan. It goes into real income producing assets. It pays me cash flow. Right now, I'm 27 years old. In about 2 weeks, and I'm bringing in about $3,000 per month in passive income from real estate. And that's because I've followed this plan. Okay, so if you're 35, 40, 50 years old, like, it's not too late for you. If I can do it, you can do it. You've got more life experience than I do. You probably have a better understanding of how things work than I do in some areas. I am just focused on the right information. That's the only difference. So I want you to click on that link below. It's called sacredaccount.com, and that's going to give you some information about the Sacred Account, how it can be used, what you need to know about it, and really how it could potentially be an alternative to your 401k plan. So if you click on that, you'll see some info. If you like the info, you can reach out to us. We can get on a call. I can answer your questions, give you more information. I'm gonna have some questions for you as well to see if this account really is a good idea and if it's something you qualify for. Anyways, thank you for watching. I appreciate it. Make sure that you like, share, and subscribe. Again, that is sacredaccount.com. This has been Jerry Fetta over at Wealth Dynamics. Have a great day. I'll talk to you soon.